Man, we just got a PPI inflation surprise positive reading. This is really good for the markets, guys. And it's one down, one to go. Tomorrow, we're going to get our CPI inflation reading. But remember, the PPI, the producer price index, normally gives you a good kind of leading measure as to where the CPI is going to come in. Now, I'm going to explain to you exactly what I think is going to happen with the Bitcoin price and what we need to happen. But right now, we've just got hot off the press that the PPI inflation data was expected to come in at 0.2% month over month. It came in at 0.1%. Now, why is it so important? It sounds like such a small difference, right? Well, 0.2% month over month also means 2.4% inflation annualized. A reading of 0.1 is actually 1.2% annualized. So if you think about it, producer price index at the current run rate is a yearly figure, if you were to annualize it, of 1.2%, which is showing real good signs in terms of price data, and markets are starting to see this in a positive direction. Now, tomorrow morning, US time, we will get a CPI reading as well. So we're going to look out for that consumer price index number. Again, the market's expecting 0.2% up from a 0.1% decline in the prior month. So that's something we want to watch out for. There's room in there again for at least a kind of meet at 0.2% and maybe even a surprise at 0.1%. So we're going to look forward to that. Now, remember, why is this whole narrative important and what's it got to do with crypto, which we're going to look at now? We know that this market is fearful about a recession. Some people are claiming maybe we're already in a recession and we're only going to become a little bit clearer to that fact in a couple of months' time as the data comes out. So now every investor in traditional finance and crypto, the big investors, we now know Bitcoin, Ethereum relies on institutional investors, right? Whether we liked it or not, people were calling and they wanted the ETFs. Well, guess what? Now that you've got your Bitcoin ETF, now that you've got your Ethereum ETF, you need to follow what institutions are doing. And institutions right now are focused on this growth puzzle. Are we stagnating? Right? Now, the first question you need to ask yourself is there stagflation? What's stagflation? No growth, right? The economy is not growing, but inflation's going up. Fortunately, with these readings that we're covering off, and hopefully in our CPI reading tomorrow, we can show that inflation is cooling off, and that's going to give a little bit of relief around stagflation, that we're not going into stagflation. But that doesn't mean you're not entering a recession. You can still not have growth even though inflation is coming to the downside. And that's now going to be the worry. Do the company earnings show that companies are struggling? Do the jobs figures show that people are struggling to get jobs? Because remember, if they're struggling to get jobs, they're not got disposable income, they're not spending, and therefore companies struggle, and you end up in this loop of a recessionary loop and low GDP. Remember, 2 negative consecutive quarters of growth on GDP equals the definition of a recession. And imagine having that definition triggered close to an American election as well. So lots going on right now in the market. This is what the participants in the market are focused on. Now, what does that mean in terms of us as crypto? Well, let's zoom out. We know that we've been in this very long, boring consolidation pattern. But guess what, guys? Every time you have a long consolidation, more certain than ever, you're going to get this big explosion because you got this pent up energy. Imagine like a spring where you just kind of wind it really tight and then you let go, boom. All that energy's got to go somewhere. And that could either be a big crash to the downside or a big move to the upside. And that's ultimately what people are betting on now when they're investing in crypto, right? You're sat at this very careful level. Of course, you could fall down quite quickly here down to 45. You can fall down even quicker down to the next levels further down, right? Because Bitcoin moves so quickly all the way from 15,500 all the way to highs of around $74,000. So naturally, you could equally fall. But what's important for us now to watch for is this consolidation. We've got to watch for this consolidation. And more importantly, if you look at this line here, the red line that I shared with you guys, we've got to find a catalyst that will help us get back above this level. 63.4 up to about 63.8, very important level. If you remember, guys, that was our support level. This was our support where we formed the M pattern. I called it. I said, guys, we're breaking down. Boom. We fell all the way down to support, and then we managed to bounce. I then called the fact that, look, EMA ribbon is going to act like resistance. Exactly that happened, right? EMA ribbon act like resistance, pushing us to the downside. Now, like I said in yesterday's video, we've got to grind out a higher low before this low. We've got to turn around higher. Anywhere here's fine. Just turn around and go fight the EMA ribbon. And when you fight the EMA ribbon, get above this support area and start working your way upwards. Really important we reclaim this level here on Bitcoin. And I know the catalyst that can potentially do that for us. That could be tomorrow. That could be the CPI that gives us that excuse. If we get a good reading on that CPI, just to get back above that support level, get back above the EMA ribbon, because the PPI today wasn't enough for markets. They're going to want that CPI reading tomorrow as well, and maybe that's not even enough too. Maybe they also want some good jobs figures to start coming in through the next set of data as well before they can start moving their way to the upside. Once we move our way to the upside, I'm just going to trip you onto the weekly chart here. That's where we now have a chance of breaking this pattern to the upside. Right? This is the pattern we need to break. If you look at it, this is not a bad pullback. I mean, look at it. We moved into our EMA ribbon, and then we're trying to bounce from the EMA ribbon. In a long-term point of view, if people take out the panic and just zoom out, which is what people never do, and just take your pen, look, this is just a pullback. And then boom, you want a big move here to the upside. Right? And this is the risk to reward I want to take. This is why I drew those yellow dots in these areas to say, I want to nibble in this EMA ribbon. When I say I want to buy from positions of strength, this is what I mean. This is position of strength when people are scared and you're buying in the mean. I don't want to buy here extended. I don't want to buy here extended. I don't want to buy here extended. That's not what I'm in the practice of doing. I want to buy when people are fearful. I want to buy when they're fearful. I want to buy when we get a pullback. Because ultimately, if I can keep buying when there's pullbacks, guess what? When it rips, I can then start trimming at these positions here. And that's what I want to do and keep things quite simple. Yes, there's a risk you can fall down. I get it. We can lose our weekly EMA ribbon. We can head down to 45,000 and things can get pain for a while. But I just don't see it. I see that this market is turning a corner, and I think we're going to feel quite positive once we start to see the data come in, right? And I think that's just where it is. We've had our Bitcoin halving. We're coming to our cutting cycle. And guess what? Fed is going to cut. Fed is going to cut. I mean, if we jump on over to the Fed rate monitor tool, you can see here, markets have priced in that we're probably going to get 2 rate hikes. Markets are calling for, half the markets are saying, give us a double rate hike in the next 5 weeks on September the 18th. It's crazy. I personally don't think we're going to get a double rate cut. I think we're just going to get 125 basis point rate cut. But the point is, it's very symbolic. It's very symbolic that you've managed to make it to the first rate cut after one of the steepest rate hiking cycles we've seen in a very long time to tackle the inflation after one of the world's worst pandemics we've ever seen. And now we can start our journey from going from a Fed funds rate of 5% to 5.25 down towards 0. And what do we know about every central bank? When they panic, whether they trip us into a recession, whether the job figures are bad or whatever, what's their one way to fix things? They print money. They devalue their fiat currency. They'll devalue their dollar. And fundamentally, that is why I sit here holding crypto. So, all this doom and gloom and worry about the data, the long and short of it is, I don't want fiat, I want crypto. And now's a great time for me, net, right, when you take all the data into consideration, to be in crypto, and nobody's going to shake me out otherwise. Hopefully you found this video useful. If you like this type of content, then please do smash up the likes. Do not forget to subscribe, and I'll see you in the next one.